Hi there, Module 3 takes us into taxes and how they will play into your financial plans and sometimes decision making. Your readings and references, in addition to your interactive notes, which contain links for videos, virtual resources, and financial calculators, for this module will come from your Wiley textbook, Chapter 4, Tax Planning, and in your Get a Financial Life book, Chapter 9, How to Make Your Life Less Taxing. Let's get started. Another great feature story that plays out how important it is for you to gain any knowledge you can when it comes to personal finance, especially around tax planning time. If Natalie had understood the tax system a little better, she might not find herself in this uncomfortable situation. Although there have been many changes in the tax law over time, the United States has always maintained a progressive tax on income, which means higher marginal tax rates are imposed on taxpayers with higher incomes. So basically, the more money you make, the more taxes you will owe. Your payroll tax finances Social Security and Medicare. The federal systems for retirement income and health care is a classic example of a regressive tax. Now, if you look at your pay stub, you'll see the amount withheld from FICA, Federal Insurance Contributions Act, payroll tax, which is your contribution to Social Security and Medicare. A total of 15.3% of a wage earner's gross pay goes to this tax, with the employer and the employee each paying half. The FICA tax is regressive not only because nearly everyone pays the same 7.65% rate, but also because there's an income cap. We noted previously many people pay no federal income tax. Most of these people, however, still pay the FICA tax on their earnings and sales tax on purchases, so they don't escape taxes entirely. Okay, so bear with me now. So marginal tax rate. What this means is not all of your income is taxable, and your taxable income is not all taxed at the same rate. So the marginal tax rate is the rate that applies to your next dollar of taxable income. The tax bracket is the range of taxable income to which a particular marginal tax rate applies. Here we're going to take a look at tax rate schedules. These are based on filing status, tax bracket, and marginal tax rate. If you are single and your taxable income is between $39,475 and $84,200, this is where you're going to start to calculate and determine how much you actually owe. Your base, $4,543, plus 22% of any income over that $39,475. Quick problem. So we're going to say our taxable income is $45,000. We're filing single. What we're going to do is we know that if we're making $39,475, that base right off the top, we're definitely going to owe $4,543, okay? The next step, we have to calculate the difference. So what is over that $39,475 but under $84,200? So we've got to determine the difference. So the difference in $39,475 and $45,000 equals $5,525. That's our number. That's what we have to calculate the additional 22%. We figure that. Calculate the percentage. 22% times $5,525 is $1,215.50. So we take the base, $45.43, plus the 22%, which we figured is $1,215.50. What do we owe? Here we go. $5,758.50. Don't get too caught up on all of those calculations, as I'll give you a tax simulation. I have an activity on your interactive notes that will help you to determine where you can determine in which category you fall into. Adjusted gross income, it's going to be the total of your earned income, unearned income, minus certain allowed adjustments. And circling back to the taxable income, that's going to be reduced by that standard deduction or itemized deduction. And again, those interactive notes are going to help you really see what all of this tax stuff means. And once again, when it comes to if you need to file a tax return, determining whether you need to file and the different forms, you will see those again in the interactive notes activity. I definitely like this figure 4-5, the steps in calculating your federal income taxes. Your AGI, your deductions, and the itemized deductions specifically will come through this little tax simulation that you can look at. Tax planning strategies are very important, and there are some more tips in there. And also an activity that will take you through a 1040. As you wrap up your reading and head into the interactive notes, consider your own personal tax situation for the upcoming year and use this little check sheet. Let's head into the interactive notes. I'm going to do a quick screencast just to take you through those notes and hopefully give you a few pointers. And like all of your interactive notes, click on the links and that will give you some different calculators. Look at this one's great for taxes. Also, there are some good articles, videos, there's even some infographics and flashcards just for your exploration. And here that's for your benefit too, those dates. In addition to all the great resources, you can also practice filling out your own W-4. And this is that simulation I was talking about earlier. Go through this. It's fantastic. And what questions do you have? Use this interactive tax assistant on the IRS website as well. This next part, you've seen this before with the Next Gen, where it says complete. You will complete this activity. So go through the directions, and it's pretty much step by step. And I'll take you through a quick run through here. You won't necessarily need to submit the tax form that you complete for Boris, but make sure that if you do, you go ahead and save that on your computer, because there will be a question on your interactive notes quiz in which you will need that information. So I saved it on mine just so that I would have it when I went back. And again, I think it's one of the questions toward the end, but I kind of walked you through, and you can slow that down if you need to know how to save something as a link. And that's going to wrap up Module 3 Taxes.